Oh. Yeah, let me just turn this up a little. Yeah, I'm unmuted. Can you?
Yeah, there we go. That's me. I got it. I was muted on my side. Yeah, I can see Jerry and I can hear you perfectly.
Yep. No, I think I'm pretty good. Okay. All right, you want me to just skim through the presentation, the PowerPoint one? Okay. Yep, sounds good.
Yeah, I just posted the, yeah, go ahead and post a link on Discord. I already posted the YouTube link on my Twitter. How's your day been, Jerry?
Not too bad. I just started getting a little sick this morning, so I got like a plugged ear.
Oh, man.
But I got the volume up on this.
Okay, good. My internet went out.
Huh?
My internet went out, so I had to rush over.
Oh, did it really?
Yeah, I came over to Mr. Mo's house and set everything up really fast. And I'm like, are you kidding me? Out of all the days that this could happen, it has to be today.
Yeah. Isn't that how it always goes?
Oh, man. My wife's like, your show is in 45 minutes. Why are you with tech support? Just leave. Go find internet.
Yeah.
Oh, man.
Oh, man. At least you made it on time.
Yes.
Yeah, that's, I opened up a short on Bitcoin earlier over in like the, I can't remember, 39.50 range.
Okay.
On Kraken, and I meant to hit market buy because it was bouncing and everything, you know, on the EMA, and I'm like, this is the perfect spot to grab it. I meant to put market buy. I put limit, didn't even check it. I thought, oh yeah, it's open. So just now it went through, you know, dropped to the 100 EMA.
Yes.
And I'm like, yeah, all right, just, you know, I'm like, let's check it out. Let's see what I'm up to. It's like still there.
Oh, man. That's rough.
I was like, that short's wasted. Yeah, I just started playing with that recently again because I was using Binance 90% of the time, you know.
Yeah.
And I like it. But, you know, I mean, with the market trend, it's like I'm thinking to myself, well, we had a nice little rally, you know. And I'm like, let's see if this is kind of like a Santa Claus rally, kind of like in the Dow.
Yeah.
So, like, I'm sending some money over to Kraken and just keeping it there just in case.
Yep.
When I saw the opportunity, I was like, yep, oh yeah, I'm gonna get a good one on this one. So, but didn't work out.
Mr. Mo, are you going to be recording it, sir?
Yeah, you know what? If you can, when we kick off, you just hit your record button.
As well? Okay.
And, yeah, on your end, so we can record it locally. So I guess we got people coming in, so that's good.
Yeah, Obi-Wan, we got delayed because, of course, I was just telling Jerry my internet went down at my house. And right before the show's supposed to start. So I'm scrambling, coming over here to Mr. Mo's house, getting everything set up. And I was like, man, out of all the days, Obi-Wan, it has to happen today. But we're there. We're 13 minutes behind schedule, but we're going to get started really, really soon. What's up, Yaz? Texas crypto guy, what's up, buddy?
It's all good, man.
Good to see you, my man. Good to see you. Andrea, what's up, my man? How are you?
Yeah, it looks to be holding right now in the 100 EMA over on the 1 hour.
On the 1 hour, okay. Yep, I see that.
Okay. All right. How are we looking?
Good. We have 27 people joining. They're joining slowly but surely. We'll maybe give it another minute or so and then we'll get started.
All right, sounds good.
Are you pressed for time, Jerry?
No, not today.
Okay. All right.
Good.
Yes, Malik. It's very nice. It's a little cloudy, little overhaze, but it's nice. Temperature's nice. I think I want to say about 65 degrees, maybe 64 degrees. 64 degrees. Not too bad. Malik, where are you from? What country are you in? All right, Mr. Mo, I think we can get started.
Okay. Just bear with me one moment. And okay, BC, just hit record on your.
I already did.
On your end. Okay, cool. So we're rolling.
Yes.
All right, so let's kick this off.
Is YouTube rolling as well?
Yep, YouTube is rolling, and we have 35 people watching from YouTube.
All right, great. All right, guys. Okay. Well, welcome to this very special, very anticipated show on our favorite subject in crypto. How do we pay Uncle Sam his money? Because we all know that we're very eager to give Uncle Sam his money. And I, for one, love paying my taxes. So I just want to make sure I get that out of the way, and that if the man is hearing me, he knows that I'm very eager to give him my taxes, and I'm helping him collect taxes in his behalf. So I'm sure many of you guys have questions, and it's something that's really, really important, guys. Taxes is not something you want to mess around with. We've all seen it here in the US, that they will make an example out of anyone and everyone they can. It doesn't matter how rich or how powerful you are, you cannot get away from not paying your taxes. They've made that very, very clear through the years. And so I want to make sure that we're all prepared. And we have a member of our Discord community, Jerry, aka CryptoSyn, that is taking time out of his busy schedule to be here with us. And I want to thank you, Jerry, personally for helping us out. And not only in this show, guys, but he has been very active in the community, answering all your guys' questions for the past few months. He's one of our original members. And again, Jerry, I really appreciate that. You're definitely helping a lot of people out. And even, guys, if you're not from the US, remember that Jerry can at least help you guys put together a package to present to your accountant in whatever country you're in. So even though you're not in the US, keep him in mind, keep his contact information, and hit him up, send him a DM, and maybe you can use his services to help you put together your own taxes information for your taxes in your related countries. So let me go ahead and introduce Jerry, aka many of you know him as CryptoSyn from our Discord. Hey, Jerry, how are you?
I'm good, and you?
Good. Thank you very much. Thank you very much. So, Jerry, let's start with tell us a little bit about your backstory. Tell us how did you get involved with crypto?
Well, actually, I started doing personal income taxes probably about 15 years ago. And about a few years back, someone came to our tax place, our tax and accounting place, and was like, I got some crypto that needs to be taxed. And the general consensus around the office was, I don't know, what do we do with this? One Bitcoin in, one Bitcoin out. I think he's good. And I'm like, well, no, there's got to be more to it, you know? And it was really my curiosity that got me going. And everyone else was like, yeah, we can figure this out. We'll just do it. Yeah, they had one Bitcoin they started with. It was 8,000 or whatever, you know, and it was this when they cashed it out. So, you know, curiosity got the best of me. I started trading to further enhance my experience and understanding and knowledge of it. After doing a little kind of, as I call, a sabbatical, I left my tax office. I went over to a crypto CPA firm over local in the area. I did about 1.5 years there, you know, because I wanted to get a really good, firm, solid foundation of it. And while I was there, you know, they showed me how to properly reconcile it because, you know, there's software, but it doesn't really work also well all the time. So that, you know, that's how I kind of got into it. But as I started, you know, messing around, I started trading, and then I really got a great, like, solid foundation of it. Now I'm an avid trader, and I'm into specialized just in crypto taxes.
Great. That's awesome. Let me give me 1 second. Let me mute here. I've got a
Sure.
Mr. Mo, can you grab that? There we go. All righty. All right. So can you had a put together a presentation from what I understand. If you wouldn't mind going over that presentation for us. And while you're doing that presentation, I'm going to be looking at the chat box, guys. So if you guys have any questions during the presentation, do you want me to address those questions as we're going the presentation, Jerry, or do you want to wait to the very end and then pose those questions? What would be easier for you?
You know, it'd be good to just do them as we go through it. So this way, maybe it'll help your understanding better as we continue on.
Okay, perfect. So we're going to go ahead and get started with the presentation. Well, Jerry's going to get started with the presentation. If you guys have any questions related to that portion of his presentation, please post your questions on the general chat box in the inside of the Zoom application. Don't click on the raise hand buttons, guys. We're not going to take any live questions. We're going to take all the questions in writing just because of the connection issues and the background noise. We want to go through these as smoothly as possible. So if you can type your questions in the chat box, that would be great. We'll take some Q&A after his presentation. Then we'll have people come on live and speak on and give us their questions live if they want to. But I do encourage you guys to just type your questions inside of the chat box. All right, Jerry, it's all yours.
All right, thanks. Do I just share it from here?
Yes, sir.
Okay. All right. Let me open it up. All right, just give me a second. I wasn't prepared for that.
No problem.
I just got to find my file here. Okay. Open. And then I just hit the share button down here? Or?
Yes, that is correct. And then just click on what you want to share and then hit share at the bottom right-hand corner.
Okay, perfect. Got it. Can you guys see that all right?
Yes, we can.
Okay, good. Let's start off with what is taxable. There's a lot of things that's going on in crypto nowadays, and there's a lot of different situations that can create a taxable situation. We're going to start off with explaining what is a short-term gain and loss. And here what we have is what is considered to be a short-term gain is basically any trade that is on any coin that is sold in less than 1 year from its purchase. A short-term gain is also called an ordinary income tax rate. That's what you need to focus on when we talk short-term gains. We're going to basically talk ordinary income tax rates. ordinary income tax rates are the tax rates that most 90% of Americans are taxed at. Your taxable wages are ordinary income. If that helps any. All right, let's see. I've got an example here. The W-2 that you receive from your employer says that you made $65,000 this year. This is going to be your income before you take deductions from your income, if any deductions apply to you. We will use that income to figure out your 2018 ordinary income tax rate based off of your filing status. So what I'm saying there is you made $65K according to your W-2. Now, that's your ordinary income. And that ordinary income is going to fall under a ordinary income tax rate bracket. Any short-term gain or loss is going to be considered part of your ordinary income. So will get added or subtracted to a degree to what you made this year.
Okay.
Crypto traders. These guys are going to fall under the ordinary income tax bracket 98% of the time. They're trading, they're holding a coin for less than 1 year. Most of the time, they're in and out of a trade within days or weeks. So you're gonna be taxed on your gains and losses based on an ordinary income tax bracket. ICOs.
Hey, Jerry, can you go back to that last slide real quick? I had a question on that. You said here if you bought XLM with USDT, then you sold XLM and took profit in USDT, that is considered a taxable income, correct?
That is correct.
Okay, but if Tether is basically a coin, it's not cash, it's still applicable? Because, I mean, USD is with the actual Tether is still a coin that can go down to zero.
Right.
That is still a something you would be taxed on?
Yes, actually, anytime you convert from one pair to another, one coin to another, it's going to create a taxable event. So you can buy XLM with USDT, you can leave and sell it and take profit in Bitcoin or Ether, and that creates a taxable event. You can enter it, you're fine. The tax event hasn't been created. But once you exit, however you exit that coin, you're going to create the taxable event.
Okay, now I'm going to ask you a question, and I'm not asking to try to imply that I'm trying to cheat, because I would never do that. And this is a question from a friend of mine. A friend of mine wants to know that if you buy XLM and rather than take profit into USDT, if you use something like Shapeshift where you could swap coins out, if I take my XLM, I get out of my XLM trade. Oh, actually, I couldn't do that because I'd have to go into something else in order to take. No, never mind. I answered my own question. I was just wondering if I could put, if I take XLM and shapeshift it to something like a stable coin, like a Doge. If I convert it to a Doge, would I still have to pay taxes on that? Okay. Is there anything legally that I can do, that I can shift one coin to another without actually cashing out, that I'm allowed to do by law, where I don't have to pay taxes until I actually cash out, like a shapeshift or anything like that?
Currently, right now, there isn't.
Okay.
See, from the minute you buy it, let's say XLM is at 18 cents.
Okay.
To the minute you spend it, once you spend it right then and there, let's say it's 19 cents, you created a taxable event on that penny between 18 and 19 cents from the time you bought it to the time you spent it, even if you spent it as XLM.
Okay. All right. Okay. Thank you very much, Jerry. Appreciate that.
Oh, anytime. Another taxable event that falls under the ordinary income, which is basically possibly short-term, depending on how long you hold it, but most of the time they're held for short terms, are ICOs. Now, ICO we do it a little different the way we determine all the gains and losses on this. We're going to take the ETH that you sent over. We're going to value the ETH. The day that you sent the ETH is going to be your basic cost basis. So we're going to say if you sent 10 ETH at $100, we're going to say you bought all those coins for $1,000. That's your initial starting. So that's how we're going to figure out in the long term or short term, depending how long you hold that coin for, whether you profited or you lost, and whether we're going to give you a long-term tax rate or a short-term tax rate. This is something that some people don't realize because they think, oh, it was an ICO, I sent 10 ETH, but you know what? Some ICOs are great in the long term for loss harvesting because we all know they don't end up all the time. I mean, some ICOs, XRP, XLM, ADA, those are great, but some ICOs, you lose a lot.
Okay. So let me see if I get this right, Jerry. So if I say, for instance, participated in an ICO in 2017 or whatever year it is, and say Ethereum was say $500, and I sent over 10 Ethereum, which is $5,000 over there, and now Ethereum is worth $100. That loss in value I can now claim as a loss. It's basically
the ETH is gone. But you'd have to claim the value of the ETH the day you sent it. That value of ETH transfers into your new coin.
Okay.
So let's say you used those 10 ETH 10 ETH at $500, you said?
Yes.
Let's say you used those and you bought, let's just say 1,000 ADAs, just for example's sake. Yeah. Your 1,000 ADA cost basis is now going to be worth the 10 ETH as of the day you sent the 10 ETH, which would say 1,000 ADAs equals $5,000.
Okay,
which that's not realistic, in the crypto world, but just an example.
Yes. So now the value that we had on the ETH now gets shifted over to ADA, and now when ADA drops, then we can take our losses because and as we know, the value of ADA dropped much more than the value of ETH in percentage wise, so we have a greater loss.
Exactly, and that's where some people try to say, "Oh yeah, I didn't do any ICOs," but don't realize the benefit of this in the long term for loss harvesting.
Okay.
Because you might have a really high basis on that coin that you took in on the ICO, and you could turn around and sell it, and now it's like, and buy it back if you want.
Sure. Okay.
So yeah.
Great. Thank you.
Receiving payments in crypto. As of today, this is going to change. Actually, as of yesterday, about I think it was 11 a.m. Eastern. This is up for a possible change coming in the future. Right now, when you receive payments in crypto, you actually account for this twice. As soon as you receive a payment from somebody in crypto, right then and there, it's considered ordinary income. Ordinary income is basically the same thing as if you were a contract employee and someone gave you a, contract pay. So let's say someone sends you 100, and I've actually done a few of these. You want to sell or you want to do some work for somebody, and they pay you in XRP. The value of XRP, the minute you receive it, is considered kind of like salary pay or hourly pay, but in one jumbled payment. So you get 1,000 XRPs at 39 cents a piece to fix some guy's stove. Those 1,000 XRPs turn out to be, $39, let's just say. So that $39 is considered as income that you got paid to do that work the minute you receive it. Now, here's the thing. To complicate it more, when you sell that, now you have to claim either a short-term or long-term gain on that XRP. That's where it's, kind of crappy per se, because not only did you claim it as income and you got taxed on it for receiving a payment in crypto, but now you have to claim any short or long-term gain, hopefully a loss, but let's just say a gain. So you get taxed on it again.
Wow, that's really unfair. If we're going to try to make crypto a way of payment, that we're going to get hit twice. I hope they change that. And now, when you said that this is only applies to starting as of yesterday, I assume there was some law?
Yeah, it's actually changing possibly changing as of yesterday. There's a bill in the House that was filed yesterday around 11 a.m. Eastern that is hopefully going to fix this.
Okay.
They are trying to change this to basically where it's only going to count once, and that's when you receive it. So whatever it's worth when you receive it will be what you're taxed on.
Okay.
And you're allowed to have up to $600 of a gain exclusion. So you don't have to worry about really being taxed on it twice. Okay. Because now you get taxed on it when you receive it, and then you get taxed on it again when you use it or sell it.
Wow.
So they're just trying to set this up now to where you only get taxed on it when you receive it, and you're going to get a $600 gain exclusion, which means most likely you won't meet that and you won't get taxed on it a second time. And that's part of them trying to make crypto more of a regulated thing so you can use it for payments the way it was intended.
Okay.
So looking forward to see what happens with that.
Okay.
Spending crypto is pretty much the same example as receiving crypto. You're going to generate a tax event, and you're going to do it pretty much as in the example, as I said before. You generated the tax event when you received it, and then you generate the tax event when you either sell it or you spend it. It's two different events. When you receive it, it counts as income. But when you sell it or spend it, it counts as a capital gain, short-term or long-term, depending how long you actually held that coin.
Okay.
Airdrops, for now, they're also kind of like receiving payments in crypto. They're double taxable events.
Oh, wow.
Yeah. When you receive an airdrop, like example as I have here, you receive 10,000 Navy coins. The minute it was airdropped, whatever the value is of that coin is considered your first taxable event as income. Then when you get rid of that coin, sell it, or whatever you do with it, you get taxed a second time for now. And that's either a short-term or a long-term gain, depending on how long you held your Navy coins.
Okay. Now, when you say you sell something, and again, I'm just asking this, I'm just trying to play devil's advocate. Yeah. If you sell your coins, how does the government, I mean, what qualifies as a sale? And let me pose a scenario that might happen that I would never do. If I got something airdropped to me, and I take that and I go and put it in a USB, take it offline. How does the government know that I spend it? I can plug that into somebody else's computer, buy a gift card, and use a gift card. How would they know? The moment it leaves your computer, is that considered that you spent it?
No. Literally, the minute you spent it, it would be considered as spent. But here's the thing, okay? We all have an exchange account. And unless, 9 times out of 10, you're having something airdrop. 9 times out of 10, it goes to an actual wallet, okay? If you're under the government's radar, per se, they're going to start off with your exchange addresses. What they're going to do is they're going to look at all the incoming and outgoing addresses there. And then they're going to trace every address. And everything is a ledger. Let's not forget what blockchain truly is. it's a recorded ledger that cannot be altered. So if you have an exchange account on Binance and you're in their radar, you use the same wallet where you got 15 airdrops, okay, and you use that same wallet to maybe transfer Bitcoin to Binance, they're going to get that wallet address. Then they're going to now investigate the wallet address to see what you had there. And then they're going to look at your wallet address and look at the ingoing and outgoing addresses from there to basically create their paper trail. Everything, the one thing everyone doesn't understand, crypto is, everything is literally trackable on the blockchain. And it makes it really hard if you're that person in their eyes, you know, someone with huge value, to hide anything. It's not as anonymous as anyone really thinks it is.
Yeah, that's the impression I was in when I first got into crypto. It was very anonymous. You can get away with a lot of things. Yeah. How are they going to track it? My name's not on it. If I go to another exchange, but I guess they can just track, like you said, off the blockchain. They can just trace those addresses from one blockchain, from one exchange to another, and follow that trail until somehow it stops somewhere, and it'll have your name on it.
One address from you. That one address will open up everything as long as you've used that address and connected it to any other addresses.
Okay.
So if you have a wallet that you send something to and you use a certain address and that address is never linked to anything and that wallet is never linked to anything, you might have a good chance. But once that wallet touches an exchange account, most likely if you're under their radar, they're going to track it all back.
Okay. Even if you use a decentralized exchange? And again, I'm just asking for a friend.
No, actually, no, that's a good question. But decentralized exchanges actually don't record transactions. Mm-hmm. Either Delta and Fork Delta, two exchanges where you would actually have to record your own transactions on. So that would kind of get around that with a decentralized exchange.
Gotcha.
But again, it needs to go to a wallet if you just wanted to save it somewhere where you weren't going to touch for a long time, let's just say.
Okay. Thank you for that. I appreciate it.
Anytime. Mining coins. Again, just like receiving payments and spending crypto and airdrops. Now, we know a lot of miners out there. The minute they actually get that Bitcoin distributed to them as their block reward, right then and there, that Bitcoin has got a value. So if you've been mining coins all year, and back in February, you're given 2 Bitcoins for mining that month, those Bitcoins are going to be taxed first as income at the rate of February's Bitcoin historical pricing, which I believe was around $9,000 to $11,000 per Bitcoin. And then when you actually use that Bitcoin to transfer it into cash or whatever you do, that's when you can actually take a short or long-term capital gain. So let's say you're mining coins. In February, you received 2 Bitcoins. At the time, I believe it was valued between, we'll just say about $10,000, I think was the average value. 2 Bitcoins, $20,000. You receive that as income. That's the first taxable event. Now, you saved it all year, those $20,000. You go to spend it now, but it's only worth $7 because it's gone down. You can take a loss as a short-term capital loss, and that'll be a bonus. But at the same time, it's going to have to be looked at twice for now, at least until maybe in the future they change things like they're doing with spending and receiving crypto.
Now, can you do this? And I believe you have answered this before, but just for those people who might be thinking about it, if you got those 2 Bitcoin and they were worth $10,000 each, let's just say, and you have 20,000, and today it's worth, say, 3,500 each, and you, like you said, it's 7,000. Can you sell that right now and rebuy it so that you take the loss and now you rebought at the exact same price. You're not really taking a loss. You have the same amount of Bitcoin. All you do is just pay the exchange fee, which, a 0.25% on rebuying it and selling it. Can you do that and still claim those losses?
You can, because right now, there's still no rule and regulation on wash trades in crypto. So it's allowed, which is almost to everyone in crypto. So you can take those 2 Bitcoins. You can say, all right, they were worth 20,000. Now they're worth 7,000. I'm going to take a $13,000 loss. That's what we call loss harvesting. And you rebuy it. You can just set it for even $1 less. It doesn't even matter. You can buy it at the same amount for $1 more, $1 less, whatever. And there's no, you don't have to wait 30 days like you do in stock trades. You can literally do it instantly right after. And you can claim a $13,000 loss, still have 2 Bitcoins, and move that loss forward. So this way, when a bull run comes or all of a sudden Bitcoin goes back from 3,000 to 10,000 and you're supposed to be taxed on that, you can use that loss against the gain itself.
Oh, okay. All right. Because now you have a credit of $13,000 from that loss you took. So now your new taxable income will start from the moment you rebought the coin at 7,000, and if it goes up to 10,000, now you have a $3,000 gain, but you have a $13,000 deduction off that gain.
That's correct, and that's why we always stress with December 31st coming up, loss harvesting on anything you've held for a while and has has actually decreased in value. Is huge. It's a huge potential for you to save money in the future, as well as you can actually write down your current taxable income up to $3,000. So if you worked all year long, you've been taxed all year long for $65,000. And that's the rate, you were taxed out of your payroll check. If you take that loss, which you can take up to $3,000 on ordinary income, which is what you earned, you're actually going to get a $3,000 reduction in your taxes this year, or you're going to get $3,000 in a sort of about 15% of that, maybe like $450 back as a refund.
Okay.
So loss harvesting is definitely a bonus.
All right, I've got a few questions from the members. If you don't mind, we'll take some of those. So I've got one that says from Techno. It says, I am in the red. Is it illegal to not report losses? I understand it can help by reducing my income. Just want to know if it's illegal to not report the losses.
The legal answer to that is yes, technically.
Okay.
It is. Most likely they're not going to look at you and get down on you for not reporting losses, because that is, honestly, it is a benefit to you that you're giving up.
Yeah. Okay. All right, great. And I've got another one. It says, in other words, sending the ETH for an ICO creates a taxable transaction, correct?
Yes.
Okay. I had another one here. Let's see here. It says, what's the best thing to do if you can take big losses but only carry forward 3,000 per year?
Now you can actually, the way that works, okay, you can take a $50,000 loss this year. The $3,000 carry forward only applies to your regular income that you've earned. So let's just say this year you had absolutely no gains. You had a total loss of $50,000. Okay, first thing you're going to do is you're going to take a $3,000 deduction to any money you earned through working this year. Carry forward $47,000 into next year. Next year, let's just say you made $44,000 in stock gains. You can take 44 of the $47,000 in losses you carried forward. Okay, and you can apply them and zero out those gains and still do $3,000, which is your balance left, and subtract that from taxable income. It's a two-step process. Okay, you can carry forward a large amount, and you can use that large amount to subtract from what we like to call short-term and long-term capital gains, which are usually gains you get through trading crypto, trading stocks, equities, anything like that. The $3,000 only comes into play as a subtraction from any income you earned through an employer or a contractor. Okay. So every year you can take $3,000 as a subtraction from money you're being taxed on through your employer or money you haven't paid taxes on yet through a contractor. But you can also move that huge portion forward of that loss and use it against any gains you might make on a bull run or on stock gains.
Okay. All right, great. And I have a question here. I think I could probably answer this. What if you invested the money for a family member? The family member that you invested for is the one's responsible.
Correct.
Correct? Okay. Yeah. All right, Techno. Yeah. So that whoever you're investing money for, they're going to have to be responsible for the taxes. The burden doesn't come on you, but if they don't report it, you're not going to jail. They're going to jail. So, be careful. I think if you, for example, okay, I have another one from Yaz. If you put, for example, a total of 50,000 into the market and you're at a $40,000 loss, do you have to break down each trade or can you just submit it as a total loss?
If you get audited, they're going to expect you to break down each trade.
Okay.
And that's really what it comes down to. And if you get audited, it becomes a real nightmare situation.
It's like having receipts in a normal business. You have to show the receipts.
Exactly. You can claim, you can say, hey, I spent $40,000 on meals this year. But when they audit you is when they're going to want to see the receipts.
I gotcha. Yeah, because you can just say, yeah, here's my bank statement. Look, I spent $40,000, but they want to know exactly what you spent the $40,000 on.
Right. So yeah, you can put that on the line. Just make sure you have the documentation to back it up if anything were to happen.
Okay, perfect. Thank you. Go ahead and just, we can continue. I appreciate it.
Sure. Okay, now to give you guys an idea of when I was saying there's short-term and there's long-term capital gain tax rates, it's going to make the difference between whether you're an investor or whether you're a trader. Now, the next couple slides are going to show you the difference in the tax rates. These are the tax rates that you're looking at as a trader right here. This is ordinary income tax rates. If we look right over here in this 24% bracket, if you're single, you can make in trade profits between 82.5 to 157. Keep that number right there. The 82.5 to 157,000 in profits is going to be a 24% tax rate. This is something you want to think about when you decide whether you're going to invest or whether you're going to trade and get involved in crypto that way. Because now, as we scroll down here, I'm only going to pay as a long-term investor 15% tax rate on any gains I make on my coins between 38,000 to 425,000. So what's that mean? Short term is less than 1 year. If I buy Bitcoin today and I sell it without holding it for a full year and I make $157,000 on it, the government's going to tax me at 24%. But if I buy Bitcoin today and I hold it and I make $157,000 on it, but I hold it for a year and 1 day, and that might be the most important thing you need to remember, 1 year and 1 day, you're going to save yourself 9% tax rate for that one day over. So if you want to be a trader or you want to be a investor, just remember, if you've held something, go the extra day, it's going to save you a ton of money, because a 10% on $157,000,
$15,700.
exactly. And there you go.
The problem with that too is in the crypto world, things change so quickly. Our bull runs are 7 weeks like we had in 2017. So sometimes not selling the top, I'd rather sell the top and take an extra 9% a bump from the government than hold it all the way down just to save that 7%. So 1 year is 7 years in crypto is like a dog years.
Right.
So you might have to don't hold on to something and don't not sell the top just because you want to save 9%. Sell that top, take the cash, because you're going to be, I think you're going to be better off paying the extra 9%, in my opinion, than holding on just because you want to save 9% in tax.
The same thing happens in the spare market too. Doesn't even have to be a bull run. You could have made 9% more if you sold it yesterday versus today.
Okay. Yeah. All right. Great.
So there's a lot of things to take into consideration, but I honestly believe as it gets more regulated, we'll probably see not as much volatility as we see today. Because when investors get involved, this is what they're looking at: long term, short term, and this is and as wonderful as it is to have this volatility, because it opens up the opportunity to make some good money, they're not going to see it that way, because they're 9 times out of 10 going to be long-term investors.
Okay. All right. Perfect. I've got a question here, a really good question from OB1. His question is, can you address the recent Bitcoin Cash fork? Bitcoin Cash was $500, and then after the fork, ABC was $270, and then SV was $130. How is this addressed?
There's 2 ways of looking at it. I am not 110% positive yet on which way we're going to take this, but it's going to be handled in one of 2 situations. We're either going to say, you bought Bitcoin Cash at $400. The day of the fork, it became worth 0. But you were given an airdrop of 2 different coins. And the value of those 2 different coins were SV. I think it opened at $147. And remember, airdrops get valued the instant they get dropped to you. So it opened at $147, and Bitcoin ABC, Cash ABC, opened, I think it was at like $289. So altogether, we're looking at a $420 airdrop. You'll take the loss from Bitcoin Cash from 400. Let's say you bought in at, actually, you know what? Let's say you bought in, realistically, the low was 412, and then it ran to about 640. So let's say you bought in the 500s. Okay, let's say you bought in at 510. Okay, we're gonna say the Bitcoin Cash of 510 was a loss, but then against that loss, you're going to bring in all of a sudden $420 opening price worth of income. So you're only down about $100 right now at that moment in time as a loss. That's going to kind of carry over. And then the moment you sold it from that point, because now you have 2 coins, you can take losses or gains, because we know that the cost basis of SV is $140 the minute it was airdropped. Now, when you sold it, you either sold it at a loss, or you did it when it ran up, and I think it almost went up to 150. And Bitcoin Cash ABC was about 289 airdropped, and you're going to take a loss on that down to maybe about, right now, I think it was 211 this morning at its high. So you're going to look at zeroing out 1 coin as a total loss, but then bringing in 2 new coins with 2 new cost bases of their opening highs the moment you received it. That's one way of doing it. Now, the other way of doing it is saying that Bitcoin Cash ABC is really still Bitcoin Cash, and that you bought in at 5, it's only worth 211 now, so you have a loss there. But then we're going to say SV was airdropped as an additional coin. So there's 2 ways you can go with it. Either SV was the one coin that was airdropped, and Bitcoin Cash ABC retains the value, and SV is an additional value. Either way you look at it, currently, you're about, I think we almost came close to break even.
Okay.
If we run for a little while longer, it all depends which way this market's going. We might come close to break even on that. But there's really 2 complicated ways of valuing this. And we either zero out Bitcoin Cash and give you 2 airdrops, or Bitcoin Cash ABC carries the value, not the value, but it carries the investment value you put in from Bitcoin Cash.
Okay.
And then we throw you an airdrop of SV.
Gotcha. All right. Thank you very much for clearing that up.
Yeah, no problem. Yeah, there hasn't been any. Normally, forks always kind of, Ethereum lives on. Ethereum Classic is the new coin that was airdropped, kind of thing. There hasn't really been a split off like this where it just died before. So most likely we're going to carry the value over somehow, because we're not going to just say, hey, it's gone,
Okay. Well, some exchanges actually are not, if I'm not mistaken, there's an exchange that it's not calling it ABC, it's calling it Bitcoin Cash.
Coinbase, I believe.
Coinbase, I believe it is. So in that instance, how do you claim that it went to 0 when they're still using the same ticker?
And that's the thing. If you bought it, that's where I said there could be one of 2 situations. If you bought it on Binance, you can zero it out. But if you bought it on Coinbase, you're going to carry over the value of what you initially purchased it for.
Okay. Okay.
And then if they ever give you SV, Coinbase, shame on you, by the way. If they ever give you SV, then you'll have an airdrop coin to add to that.
Okay. All right, great. Thank you very much.
All right, so last thing I want to go over is just some general tax tips. I've already kind of went over some of these, like loss harvest. Here's one that people don't realize. Crypto is technically considered property under IRS's eyes. Even though with property, you can do this little trick called like-kind exchanges to avoid taxation. People have already used that up last year, and now the IRS will not let us touch that anymore. So if someone tells you can do a like-kind exchange in crypto, because let's say you had $55,000 in profits from stocks and crypto is a property, it's not true anymore. That is totally off the books and gone. Wash trades, again, no rules for that right now exist. Take advantage of them. And that always helps out your loss harvesting. You have till December 31st on that. So if you're in a loss on anything that you're currently holding, think about considering taking the loss to move it forward. And finally, don't seek any accountant or CPA. A lot of accountants and CPAs will take the job on, and they're going to use software like, I don't know if I can technically mention it, but they're going to use software out there that's designed to calculate gains and losses for Bitcoin, let's just say. Those softwares, honestly, unless you do 40 trades or less, don't work. I spend 70% of my day correcting things in those softwares. Because of the way I do my files, I actually do them the old school way, which is and reconciling them manually. And I find out there, if you're a high frequency trader, or you have just maybe you're not a high frequency trader, but you have a lot of airdrops, a lot of trades from many different exchanges, more than 5 exchanges, the software what it's going to do is it's not going to catch everything. So all of a sudden, what it'll do is it'll give you what's called like a zero cost basis on Bitcoin, for example. It'll say, oh, you paid zero for Bitcoin, but you sold it for $3,000. You made $3,000 profit. A regular accountant doesn't know Ethereum, doesn't know Litecoin, and isn't going to catch that. He's just going to think the software said you made $800 on Litecoin. You made $800 on something called Litecoin. So do your due diligence when you go out there this year and you're looking for someone to do your accounting. Ask some questions. See if they can even answer anything about crypto. Because as I said, I've seen it out there. 90% of accountants will take your money, do the work, and send it to software, and you're going to end up paying a higher tax bill just because they gave you this false hope of knowing what they think or what you think they know. So due diligence when you go out.
Can somebody hire you to do their taxes even though you're not in the same state? Can you do it, online and through FedEx? If you have to actually sign something, physically sign something, you do it through FedEx, and they hire your services?
Yep, actually they can. Nowadays, I mean, people can, if they really felt comfortable, which I've actually have people from other states, they can literally take pictures of their W-2s and just text them to me. Okay, I mean, great. With technology nowadays, we have so many options.
Okay. All right. I have a question from Crypto Park. He says, if you are a full-time trader and do not have any earned income, would this be considered a trade or business and be reported on Schedule C instead of Schedule D, and having a payroll and having to pay payroll taxes?
Yeah, actually, funny thing, we discussed this the other day. There is an IRS rule about day traders. And yes, as long as most of your income comes from trading, you can technically be a trader. And yes, you can put it on Schedule C, but here's the thing. The IRS really doesn't like anyone to be labeled as a trader. If you read through the regulations and all the you musts to fall under this category, you're going to find that there's a crap ton of stuff that you have to meet to actually be called a trader, and now to start, being able to use a Schedule C to write off whether, you're paying money to be in a Discord group, whether you're out to lunch or whatever and you want to take a meal. So it is there. It is in the IRS one of their sections and regulations that you can be labeled a trader. You just have to make sure you meet all the qualifications. Again, it's something that they do not like to give out as a label for someone to be a trader. But if you do meet all that criteria, you can take advantage of that.
Okay. And we have another question from Obi-Wan. There is some software out there that you can give your APIs access into trading platform, wallet, etc., to track your transactions, such as Bitcoin Tax and Coin Tracker. Do you have any recommendations for software to gather all your transactions to put it in a gains and losses report?
If I were to give any recommendations to any software currently, the best working software out there right now is Bitcoin Tax. But again, when I run the gains and losses report on that software, I've come up with quite a few errors for people who have more than 30, 40 trades. Okay. So, it's out there, it's available, but if you're a real trader, I mean, I wouldn't count on the software to get it right. I really wouldn't.
All right.
If you buy I have quite a few clients who will buy maybe like 30 coins when they hit lows and just hold them. Those are the kind of people I would honestly send over the software. for now. I mean, maybe things will change once I get these software updated. And I don't mean things change in 2018 or early 2019, because I've been using it for the last month and I've been pulling my hairs out trying to get the thing to give me a right answer that actually agrees with the paper numbers. And I can get it to do it, but the problem is 9 times out of 10, it's not right for high frequency traders.
Okay, I've got another question from Lifelong Learner. To see if you qualify as a day trader, according to the IRS, where do you look?
You can go right over to irs.gov, and there's a little search box over there. Okay. And you can just type in trading, trader, and you'll be able to go through the IRS regulations and sections and regulations right in the IRS codes.
Okay. And for those who have not used any software to track their gains and losses, Texas Crypto Guy wants to know, if we don't use the tax software, do we just give the raw data to the accountant?
If your accountant knows crypto, he should be able to take the raw data from the CSV files and reconcile it.
Okay. All right. Great, great, great. All right, guys. Well, I don't have any more questions here on the chat. So unless you have any more questions, and if you want to add anything else, I can't think of really anything else to ask. You've answered everything that I've asked you, and you provided a ton of information that I was unaware of until we spoke a few days ago, and we kind of went over this outline. It's just amazing of how much knowledge you have and all the things to look for that I would have never thought. Is there anything else you wanted to add to what you explained?
I'm going to be posting and you can expect this to happen. Tax laws are going to change with crypto.
Okay.
As it becomes regulated more often. If you want to follow me on Twitter, feel free, because I'll be posting articles on there anytime they change things, so you guys can stay updated.
Okay. All right, great. And for our members of my Discord group, we're going to be adding a channel, a sub-channel called Taxes. So we're going to be putting in there a lot of the information here, some of the charts that CryptoSyn, aka CryptoSyn Jerry, provided for us. If, with your permission, of course, CryptoSyn, some of the I think it was a number 9 slide, things like that. We would like to put those into the sub-channel so that people can have that easily available. Any tips that he has, we'll put it in there as well. Also, we're going to have his contact information will be on the pin. If you go to the top of that sub-channel, it'll say pin. If you click on that, it'll have all his contact information. So I definitely encourage you guys to contact him for any questions. And if you guys want him to do your taxes, you can obviously see he is very, very knowledgeable when it comes to crypto tax. And I would feel very comfortable with him doing your taxes. So if you guys would like to use him, please contact him directly. Remember, we only have like 8 days left in this year, 10 days or so, 10 days left of this year. So get going, guys. Don't wait till the last minute. Don't do what I do. Wait till the 11th hour. Oh, by the way, are there any extensions for?
You can always on the extension and drag it up to October if you want.
October, okay, guys. So if you guys are like me and love extending stuff to the very last minute, there is hope for you guys. We can extend it, but I don't recommend you do that. I recommend you pay Uncle Sam as soon as possible.
Yeah, because those come with fees.
Yes, they do. They definitely do. All right, guys. Well, thank you very much for this show. Thank you very much for participating in this show and all your great questions. And thank you very, very much, Jerry, for all this information, for taking the time out. We really, really appreciate it. And we look forward to continue seeing you in our Discord and answering any more questions that we may have.
Yeah, well, thanks for having me.
Thank you. Mr. Mo, is there anything you wanted to add?
Jerry, that was a fantastic presentation. So much insight there. We really appreciate it. For anybody that wants more information, definitely come on to the Discord channel and check us out. And we're going to be launching the tax channel in there, so you can go in there and ask any additional questions. Once again, thanks again, Jerry. And that's it. I think that's a wrap. So if there's anything else, BC.
Nope, that'll be all. Thank you guys very much. Have a good day.
Take care.